The Chair now recognizes the gentleman from New Mexico, Mr. Pearce, for 5 minutes.
Thank you, Mr. Chairman. Thank each one of you for being here today. So we started this discussion today whether or not Dodd-Frank ended too big to fail, and a lot of different opinions. I think the first thing that I was curious about, now under Title II, we have the insurance, and are too big to fail firms dominantly banking firms, or those just different financial firms? Because where I'm going is, under Title II, they're now covered by deposit insurance, which gives them access to funds from firms too small to succeed. And so I wonder what kind of advantage that we're giving too big to fail firms. So forget whether or not Dodd-Frank did anything. We've got different opinions, but what about, Mr. Fisher, do you have an opinion about that ability for the too big to fail firms to get into the deposit insurance funds now?
Well, yes, sir, and I believe I've addressed that very specifically in my written submission, but just to summarize, again, the purpose of deposit insurance was the old-fashioned purpose of assisting commercial bankers to take in deposits, assure their depositors, and then intermediate to make the kind of loans that your constituents depend on. I believe that should be the sole purpose of that deposit insurance. In other words, I don't believe that a complex bank holding company should be able to exploit that for other services they may provide. And by the way, I don't want to take away their capacity to provide those other services, but it should be restricted to the original purpose for which it was intended.
So forget the discussion whether Dodd-Frank technically ended it. We have given them a conduit to funds that they did not have access to before, which seems to hint that maybe it doesn't have as much effect at killing too big to fail as what some of our friends on the other side of the aisle say. Mr. Hoenig, are the consequences, now, first of all, regulators have discretion. Is that correct? I heard that comment.
Discretion for
making decisions on what to do under circumstances of too big to fail during the bankruptcy. You've got discretion. Is that correct?
Well, under bankruptcy, they would go to a bankruptcy court and it would be handled there.
But as it approaches that, the regulator has the ability to maneuver certain tools, I think, is what Ms. Bair said.
The regulators will examine the institution or deal with the institution, insist on more capital to keep it from failing and so forth.
Does Dodd-Frank have any consequences for regulators if they choose incorrectly or purposely make a mistake?
Purposely make a mistake?
Just if they make a mistake. We'll just leave it at that.
Well, if it's a mistake, it's a mistake. Like that's what you have capital for, are for mistakes, management or otherwise.
So I find the whole discussion that we're having today, we're going to create a regulatory agency that comes in and looks and determines if firms are solvent, if they're qualified. But we're going to turn that over to regulators. Now, keep in mind, the regulators had been hearing for 10 years on Bernie Madoff that he was doing stuff, but they turned a blind eye, and the courts found that the regulators could not be held accountable for that. They were shielded by the discretionary function exception, and the court did express regrettable disdain for the actions, but nothing happened. Now, so we're trying to decide on fairly small nuances here, but there's no nuance in taking segregated customer accounts, and yet John Corzine still hasn't had anything done to him. He took $1.5 billion. The regulators were sitting in the room watching him, multiple regulators, and not one thing going. So we're having this protracted discussion here today on should the regulations be tweaked here or tweaked there. If we can't hold the regulators accountable, I will guarantee you it does not matter if too big to fail is in place or it's not in place, because the regulators will have in their discretion, in your terms, their discretion to determine whether or not things should be done, whether or not they should get bailout, and there is nothing that we as the American people, the taxpayer, can do. And these are the things that are making people furious out there in the streets. Well, that they get stuck for people who have wrung every single bit of profit they can out on risky adventures, and then the taxpayer gets stung with it. And I will guarantee you this whole system has got many, many problems ahead of us if we don't get this right, if we continue to create a system of too big to fail through law.
Time of the